Hey, good morning. Before we jump into today's trade plan, just a quick note that today is rollover and we are switching from the ES September contract to the ES December contract. And the zones that you're seeing right now are for the ES December contract. Now, if you want to continue trading the September contract, then all you have to do is add 6.5 points to these zones and they'll get adjusted for September because typically the volume will slowly shift throughout the day from ES September to the next one, which is ES December. But the zones that we're going to be covering here are for the ES December contract. So in the overnight session, we saw a breakout attempt which ended up failing on first attempt, attracting sellers at the next resistance zone, which also marks the all-time high. Heading into the open, our short-term bias continues to be neutral, and we know that the market is at an important inflection point, at important resistance, and how ES responds to 79, 75 to 80 quarter, which marks yesterday's high, as well as the high from the day before, is really going to help set the tone. And if we are going to break out above the 79, 75 to 80 quarter, then we do need to see some pretty decent upside momentum and broad market strength. And then beyond that, we have resistance at 82.75 to 85, which marks the all-time high. And again, in order to sustain a breakout above that all-time high, we are going to have to see some pretty decent underlying internals and sustained upside momentum. So recently, we know that the buyers have been dominant and in control, but at the same time, we are now at this pretty major area of resistance. It doesn't mean that the market can't continue to go higher, but we do need to see those underlying signs in real time if that's going to happen. And because we're at major resistance, simply a lack of strength can be enough of a reason for the market to put in a failed breakout attempt and continue to balance within the recent range. On the downside, we have support at 71 to 73, and we're also going to be using that area as the micro bull bear zone. So as long as ES is holding above 71 to 73, there's still the potential for buyers to step in and continue balancing at these upper prices and eventually still try to put in a breakout attempt. But a failure at 71 to 73 would just confirm sellers stepping in even from the failed breakout in the overnight session, and from there we can quite easily go down to 65 quarter to 67 quarter and even down towards the 60 half to 62 half zone. So at 65 quarter, 67 quarter, we still have to exercise caution, especially if we are going down on broad market weakness and sustained downside momentum. But when we approach 60 half to 62 half and 57.75 to 59 quarter, at that point you're really starting to exhaust the range potential of the day, and that would still be an area where responsive buyers can be active on first test. So again, our short-term bias is neutral. We're open to a move in either direction with the understanding that the market is at major resistance. Doesn't mean that it can't go higher, but in order for that to happen, we do need to see those real-time signals with the advanced decline line in positive territory and trending higher, the other markets holding up well, and the NYC tick holding above zero and printing some pretty decent values to show us that there is indeed a lot of broad market momentum that can push the market higher, because that's really what's needed in order to get a breakout and then sustain that breakout. So those are the main thoughts heading into the open. Let's see how ES responds to 79, 75 to 80 quarter, and then on the downside at 71 to 73. That will really help establish the intraday bias, and we'll take it from there.